So I think we're live. If you can just type into your question box the city that you're located in, I want to make sure you can hear me. Barry, you're always in Parsippany, Barry. Ken Brown, Ken's in Totowa. A lot of people coming up that I see on a regular basis. I think it's been, what, 10 weeks, everybody? And been enjoying your company every Thursday morning. So thank you for joining us. And it looks like we're out. I see a lot of cities coming up, so that's great. If people can't hear me, I've got a lot of people already telling me that they can. Morning, Phil, Jim, great. Still here, Ken, huh? All right. So today we're going to talk about the PPP and the loan forgiveness application. This came out a couple weeks ago, and I know people have been clamoring for us to talk about the loan forgiveness application, but we've been waiting to see to make sure that not that there would be no changes, but that we can get as much information digested as best possible, so to be able to give you as much information that we can. And I think that Ken, we have two presenters, Mark Weber and Ken Bagner, two partners at Sobelco. They presented to you before. I won't go over their long resume. I think Ken is going to promise to you that Congress will not make any more changes, right, Ken?
No.
No. Okay, good. There we go.
There'll be more changes. There'll be more changes tomorrow, probably, or maybe as we're speaking.
Yeah, that's the problem. And I want to caution people. We've received a lot of questions already from people in advance. We're going to be going through some of those questions. I will be watching the questions as we go along. But I caution the people that are attending, we're going to provide as much information and accurate information that is available to us right now. I believe that there's a Congress vote today or a vote in Washington today relating to this, possibly extending it. So there is a lot up in the air, unfortunately, but we're going to try and provide you as much information as possible as it relates right now. Last housekeeping item is that of course, we have the polls that I have to put up 4 times, or I put them up 4 times during the presentation. If you need CPE, you have to answer at least 3 of those polls to get CPE. I leave the polls up for about a minute. So if you hear me saying that the polls are going to be coming up, or I'm putting on a poll, don't go run and get something. Make sure you answer the poll. Let's get one out of the way right now real quick before I turn this over to Ken.
Hey, Brad.
Yep.
I got a text from somebody that said they can't hear you.
Well, I have a lot of people saying that they can saying where they're from, so they hear in some way.
Yeah,
I'll do the sign language.
They may have to turn up their volume on their computer. That's possible.
There we go.
That happened to me once, and I realized my volume wasn't on.
Either that or there's a box for settings in there for audio settings, and check that to make sure you're connected.
Okay. Okay, so let's launch the first poll real quick regarding the PPP, the new PPP application. If you can just read through, I think the poll is launched. Did I launch it? Yeah. Here we go. Sorry about that. Again, I will leave it up for about a minute, and then we'll jump right into the presentation. I don't understand the calculation. That sounds very, very common as to the complaints that I've been hearing. We've already have some questions coming in. You can always call in. Somebody says, I can see the polls, but not select. We got more people again, Colleen, but they can't select the answer. And I won't say it's just our platform. I was doing a presentation last Friday on GoToWebinar, the same platform, and some of the people there were complaining also. So unfortunately, if you need the CPE, just keep track of it. Send us the information. We'll work out the CPE. We're at 60% and at the minute mark, and 66% said I have read it. 19% said I don't understand the calculation, and 15% said the schedules are hard to complete. Not surprised at those answers. So with that said, Ken Bagner will kick us off and try and give us the best direction possible. He's read through this, he's digested through this, he's one of the most knowledgeable people in this area. So, Ken.
Thanks, Brad.
Want me to go to the slides?
Yeah, let's pull up the slides, but to start, good morning, everybody. I would say, first of all, this application, there's like about 13 pages. It's extremely complicated. So if you read it and didn't understand it, you're not alone. I probably read it 12, 15 times and still am trying to figure out to make sure that I understand all the details. There's still some questions about, whether or not you include something a certain way or not. There's more questions again than answers sometimes, and hopefully we have some more clarification on some of these items. But officially, they brought out the guidance here that really gives some more details on debt forgiveness and the clarifications of many critical issues. And I guess we'll start, if you move to the next slide, Brad, we'll kind of go from there. And then the format too, just a little more housekeeping items again, just to highlight on what Brad said. We may run a little bit over 9:30 today. What we're going to try to do is answer as many questions as possible. So we'll keep running past there. If you have a 9:30 cutoff, that's fine. But we want to give time to answer questions. We have we had pre-questions sent, so we have about 100 of pre-questions that we're going to go through that we already kind of pre-answered to go through and answer those questions, which Mark, Brad, and I will do. And then today, I can't, there's not enough time on our webinar to go through the application itself on every single part. So I'm here to give you an overview of what some of these things mean, and then we may dive in at a later session on worksheets and things like that, which we're not doing at this point. So there's some things that are clarified here which is interesting. We're going to go through a list here of some things that the application clarified. They clarified the incurred and paid as referenced in the CARES Act of expenses both paid and incurred during the 8-week period. So the interesting part about this is that it appears that for payroll that you could potentially on the application pay for payroll for prior period, and it doesn't label how many past periods you could pay for. But if you have payroll that you haven't paid, or the first pay date comes in, let's say a few days after the application, the days are included for that period beforehand. And on the back end, it appears you can accrue the days up to the 56 days. I'm not sure if they're going to change this and only allow 56 days and clarify it, but the application appears to allow more than 56 days of payroll, depending if you use the method that whenever the pay date falls, you could have the prior incurred dates that have been accrued before the 56-day period started. The other part about incurred and paid is on the non-payroll expenses. It appears that you could pay your other non-payroll expenses during the period, and if they were incurred for days prior to the period starting, the 56th day of funding, you could include those costs. For example, if you had a payment in May 10th and it's for the May, if you paid May 10th and it's for your May 1st to May 31st costs for rent, and your period started May 8th as far as getting your PPP funds, you can still include May 1st to May 7th. And on the back end, you could accrue the days if you pay after the 56 days period ends. So if you pay for your rent, let's say in July, and it relates to some days in June, you could accrue in the 56 days. So it appears that there's some flexibility to include more than 56 days in incurred and paid. I just want to go through that part of it. The full-time equivalents and the reductions, there's some flexibility in there. They changed the full-time equivalent definition to 40 hours, which I have in a slide going forward. Instead of 30, we talked a lot about 30, but 40 is one full-time equivalent. Any hours that are less than 40, you could add up for employees and divide by 40 to get to your full-time equivalents. Now, you could use a safe harbor method of anybody less than 40 hours to treat them as a half equivalent and add all those people up and use that methodology. But also, we were concerned that there'd be double dipping of the reduction for full-time employees and the 25% wage reduction. There's no double dipping, as we'll look at the application. It's that you first should get reduced on your wages that are more than 25%, and then later on you're reduced on the net difference on the reduction in workforce. So they're not double dipping on those to reduce your expenses twice. The other thing is there's no indirect bar on using bonuses to, there's indirect bar on using bonuses for owner employees. So if you're an owner, you can't just bonus yourself a higher amount to be able to get full forgiveness. You have to keep your pay relatively flat. There's a bar on that that's inherently listed inside the application. Rent obligations now have been clarified to include both real and personal property. What that means is any lease you have before February 15th, you can include both the real property leases and also any tangible personal property. That can include copy machines, it can include anything that you're leasing, or it could be cars, whatever it may be. Borrower also is able to align the 56th day with an alternative payroll period if it makes sense for you. So if they clarify that you're only allowed 56 days in payroll, the alternative period might be better, because what that does is it starts for your payroll period only, not for your other expenses. It starts your payroll period on the first day of the first pay after you receive, or the first day of the incurred of payroll after you received your funding. So for example, if you had a pay date, you received funding on Tuesday, you had a pay date on Friday, but your next pay didn't start to, let's say, the following Monday, which may not be reality. Just for example, you'd start on the following Monday and you match your 56-day pay period potentially with the funding if you're on like a weekly or twice every 2 weeks sort of pay period. If you're on a monthly pay period or twice a month, it may not really match up, but they made that have more flexibility. Brad, if you can move to the next slide.
Yep.
Yeah, so other thing, so I talked about a couple of these things here. So it's interesting, just some key things that we noticed. The IRS is saying that the expenses that are forgivable are not deductible. Congress is looking for a patch, but as of right now, the partner comp portion that's actually allocated to a partner, not the guaranteed payment, or the self-employment income by a self-employed individual, that's not something you deduct typically anyway. So as of right now, as it stands, that would not be something that would be added back to, as far as a deductible expense, because it's not deductible in the first place. So just wanted to point that out. We originally thought the loan was going to include forgiveness on interest. The application says it does not. So it's only the actual principal part of the loan. The restoration of employees, it's an all or nothing test. If you miss it by 1/10 of an employee, so when you try to restore your employees by June 30th and you don't hire back all your employees comparably to, there's a date set for actually February 15th compared to June 30th for a safe harbor. If you don't hire everybody back comparably to February 15th, you're going to have an issue with restoration. If you have costs, if you have actual reduction in workforce, you cannot restore your employees to, it's an all or nothing test. So the reduction remains even if you're 1/10 of an employee off. So just to be very clear, it's not a percentage of what you restore, it's all or nothing, which is a very important point. So it's important to get your full-time equivalent as of February 15th to understand if you actually are hiring everybody back that you need to hire back. People have asked about the EIDL loan, the 10K, if you received it, it needs to be subtracted from forgiveness. It's unclear if you could use more than 56 days of payroll. We talked about that. We talked about the non-payroll expenses. Business mortgage itself can't be prepaid, so you can't pay your mortgage down more than what's required on a monthly cycle. And we already talked about the rent and tangible property. So
Great. One thing that you said, Ken, I thought was interesting, and it was actually on the previous slide, is that you've got to have some bonuses and stuff like that, because people have asked this question already. you can't, the word I said to a client one day is you can't be arbitrary and capricious. I mean, you can't just make things up and just to use your money. If you have a bonus program, you should be systematic with it in some way and some sort of rationale behind it. Michael LaForge, one of the presenters, has said many times in the past, I think you have too, Mark, this was intended to preserve the salaries of the employees, okay? Somebody asked a question about paying for their 401k audit. No, they don't want stuff like that. They want I want the payroll to be consistent and you to be able to support certain expenses where everybody's feeling pain, covering your mortgage interest, your rent, etc. So I imagine when we go to the next slide.
Well, real quick, Brad, with that said, we've had questions about the bonuses, and if companies paid bonuses previously, like in 2019, and that was included in their base calculation, but let's say they typically pay them later in the year, there's nothing wrong with actually accelerating them to get them into the covered period, because it is something that was included in the calculation. So maybe they typically pay them in December. Well, they might want to move some of that up to get it in the covered period. And that's not, we don't think that's prohibited by any means.
No, it's not per all the information. The only thing that's prohibited is the owners putting bonuses through during the covered period. That's it. It
Correct.
Seems like that's implied in the application. I want to make sure we have time for the application. So it's 4 parts here that I think are the kind of core of this. It's the forgiveness application itself, which there's some general questions, but we're going to focus on the lines today, really what the lines are and what they mean. That Schedule A and the Schedule A worksheets, there's 2 worksheets, one for employees who basically are making $100,000 or less, and 2 is basically all the employees. It's looking at head counts and things like that. And then there's an optional form for demographics informations if you want to do that, but you're not required to do that. Okay, and I think we already talked about this. We can move to the next slide. We can keep moving, Brad. And this is just a reminder of payroll costs and all what they're included. We don't have to go, we've gone through this. You guys can read the slides later. And non-payroll costs, which we've gone through. So going to the application itself. So the application, and I just want to give an overview so there's kind of an understanding and clarity of what they're trying to do here. So it starts with the payroll costs that you enter on Schedule A, line 10. So basically you're working almost backwards. You're working from the worksheets to Schedule A to ultimately this application. You put in your payroll costs that you calculate from Schedule A, line 10, and then you put in your mortgage interest payments, your rent and utility payments. What you do then, and that's going to be your full cost basically. And then what line 5 to 7, what it does is you go back to your Schedule A and your worksheets and you're calculating your reduction. So if you notice on line 5, it says total salary, hourly wage reduction, enter the amount from PPP Schedule A, line 3. So the first thing you're calculating is your wage reduction. That again is anybody who had more than a 25% pay reduction during the period. Now, that they allow in this calculation, just to get a little bit of detail on this, anyone over $100,000 making over 100 does not get included in this calculation at all. It's interesting what it says on the actual instructions. It says during any pay period annualized, if they made over 100,000, they could be excluded. So what that connotes is if you go through every pay period during the 2019 year, if anybody during the year made more than 100,000 for any pay period, like a bonus, they could potentially be excluded. I'm not sure if that's what they intended. For now, I think most people are going to fill out the application based on $100,000, threshold per person. But that's what the instructions seem to connote. The other thing, you're going to exclude any reduction of any owner's pay or partner's pay or self-employment pay. So it's really just the employees making $100,000 or less. That's going to be in the backup of the worksheets that flow from up to Schedule A that flow up to this line. On this line, this is the actual forgiveness you calculate. So what you do is you take all your payroll costs, your mortgage interest, your rent, your utility payments that you calculate that you paid during the period or incurred. And then you subtract out the forgiveness amount for those employees to get to a net amount on line 6. On line 7, what you do then is there's another backup worksheet, and this looks at a reduction in workforce. So you have a quotient of how much of a reduction in workforce you have. If you had a reduction of, let's say, 10%, you're going to have 0.9 in there of basically being reduced, and you're going to get a total for potential forgiveness of either your total amount, which is line 6 times the quotient, which again, line 6 has already netted out the 25% reduction, so you're not getting double dipped. So you get a total amount, and then you're going to compare that amount to the PPP loan or payroll costs at 75% of the loan. And basically, the lesser of those three, you can't get more than your PPP loan, but you could be reduced by the reductions or the cap on the 75% of the payroll. That amount basically gets entered in line 11, and that's your forgiveness amount. So this is the overview. Now the devil's in the details behind this, which is the Schedule A, which we're going to head over to. We could skip through these slides because we kind of already went through that.
Yep.
We can skip through that. So Schedule A is the actual worksheet that kind of works through the calculations here and how and behind here are worksheet tables. And what it does is basically you work through your compensation that you actually have for basically your full compensation. And then and this is, again, table 1 is related to people who make less than $100,000, non-owners. Also, if you had pay in 19 but none in 20, those people don't get entered, and there's a liberalized rule too. If you had pay during the covered period but no pay, if you have pay during the covered period, obviously, or no pay during the covered period but pay during 19, you don't have to include those people as well. So you kind of put through that amount, and then you put through your average FTEs, which is on the worksheet, and then you're going to figure out the actual reduction that you have of the salary, and that reduction is basically filled out. You enter 0 basically if you have no reduction. What you're doing is annualizing your pay for the first quarter of 2020 and comparing that to the annualized pay during the covered weeks, the 8-week period. And then there's a formula basically to figure out if you're over 25%, you're basically taking the amounts and multiplying by 8 and dividing by 52 weeks to basically figure out the amount you're over per employee. You add up all your employees and it gets entered into line 3, and that's basically your reduction. That's kind of how it's working, but you have to go through the worksheet, which we're not going to go through today to get there. But that's really what line 3 is really doing. And that's the table 1. So we could, move over to table 2. Table 2 basically does the same thing, but it basically is looking at employees over $100,000 and all employees that for cash compensation and full-time equivalents. So you go through the same sort of gyrations as far as calculations of what the compensation is and the full-time equivalents. Now, I'm going to tell you right here that this is really, we're going to need payroll to help, with these calculations because there are so many periods. So what happens is you have to take a look at the first quarter period. You got to look at the first quarter of 2020. You also have to look at a period from April to June 19 for your full-time equivalents compared to a period of January 1st to February 29th of 2020. You see which one's lower. You have to look at for restoration of wages, which is coming up a little bit further along, a February 15th date. Like, let's say if you have a reduction in workforce, then there's a safe harbor that says, okay, you have a reduction. You can restore your wages. If you look at your February 15th, 2020 amount of full-time equivalents, and then you compare that to basically if you went down during the period of full-time equivalents, so your actual employee count dropped after February 15th, i.e. the crisis of what happened with the coronavirus crisis from February 15th till around April 27th, if there's a drop in the average full-time equivalents, then you could look to see if you could restore your wages on June 30th. In this restore, when I say restore, it's really restoring your people. If you restore all your people back at their wages on the period of June 30th, then everything goes away, but you have to restore absolutely everybody. Otherwise, your reductions remain in place. So the issue here, and I'm just going through, and I know it's complicated, and I know we're going through a lot of things here, is there are a million periods that you need to do calculations through these backup worksheets. And again, if we went through this the whole entire session here, we wouldn't even get to questions. So I just want to give a general overview, and then we'll go through the last couple slides here of the worksheet, which is the tables here, which it continues to move forward on non-cash compensation. You enter in employee health insurance, retirement plan payment, SDI, that you're allowed to put in state and local taxes. And then line 9, you'll notice here on Schedule A is owner comp. So that has nothing to do with, it's separate from the forgiveness calculations. You put in the owner's comp separately. And then what you're doing is you're adding all your payroll costs together. All your payroll costs get added up. And then you're going to take a look and on the next slide here. And this is the calculation where if you look at line 13, full-time reduction quotient, if it's less than 1, basically there's no safe harbor met. What that means is basically if you don't restore all your employees by June 30th, you can't have a reduction in your reduction, which basically is a reduction. You have a reduction in your forgiveness for all these things, you can't restore it. That's really what it's doing here. That's kind of an overview, just trying to make some sense out of this application. I know, trying to do my best here to help make some sense, but there's just a lot of information here. And I could say the worksheets which are here, which is worksheet A and worksheet B, this is where you enter in all your information. We're hoping to look to maybe either our software in our that we have generally has been generating all these sort of worksheets, as they've been coming out. Also, the AICPA has been helping, but hopefully we have something at some point in time in the near future that will kind of put everything into each other that links back to all the information and brings it up to Schedule A from the worksheet that brings it up to the actual application. So it all just flows in. And then the banks probably will have their own system that you may have to enter everything into or upload your documents into. We'll have to see how each bank handles this, but hopefully if things can flow up by entering everything in, it will just make the process a little bit easier for everybody.
Okay, thanks. And a couple of things that you had said. We're going to do a polling question real quick, and I'll want to clarify a couple of things. We don't know what the banks are going to use. We anticipate they're going to use these forms or come up with their own. We don't know at this point, right? I appreciate you going through this, Ken, as quick as you did. I sat through a presentation yesterday where 2 attorneys were going over the form, and they rushed through it for 45 minutes and allowed 15 minutes for questions. We wanted to be able to answer more questions. So what I recommend people, Mark, Ken, I know you consider this too, is start a practice run now. Start getting your information now and start working through the form, because when you do go to prepare the form and submit it, you don't want to be rushing it and having all the questions. So start doing a practice run now with this. I'm going to post another poll, and I'll give you a quick question. Ken, you're going to like this one. Well, first one is, what constitutes an owner? Is there a certain percent that somebody has to be considered an owner?
So, go ahead, Mark.
No, there's a lot that's been written about this, and actually you could go extreme. There's been discussions as to whether or not family attribution rules apply to this. So if somebody's considered an owner, does that make their children owners or other family members owners? So could go all extreme. Nowhere in this does it actually define an owner. And I've read some articles where they're equating it. They say the only place owner is defined is in section 401 of the Internal Revenue Code, which deals with retirement plans. And that is an IRS definition, not an SBA definition. So it's not known. Some people say that it could be, you could use like the S Corp rules where 2% or more owners are the ones who have exclusions. But as of now, for S Corps and C Corps, there's no defined amount percentage-wise. So as we know now, anybody who's a shareholder and works in the company could be considered an owner-employee.
Thank you. The one thing I want to say about the polls, people are still having problems. Ellen from our office reminded me, and I saw this at the last one. If you have your GoToWebinar maximized, you have to minimize it to try and manipulate your screen. That's why sometimes people can't click on it. Some people may not work at all, but try. You have to work with your screen on it for the next poll. So we do have, as Ken mentioned earlier, we had around 100 questions come in before, and there are a lot of questions coming in. Mark and Ken have looked over. They're going to probably just jump into some of those questions, answers, ones that they want to make sure they hit on. Somebody said this, Ken, and I want to make sure that we emphasize this enough. What's been stipulated a lot is paid and incurred, correct?
Correct.
So you can't prepay utilities, correct?
You can't prepay. What you can do, I just want to be very clear on this. You could pay during the period prior bills. Now, if you have prior past bills, there's nothing that says how far back you can pay during the covered period, meaning the 56 days. The only thing that you can pay after the covered period is a bill that relates to days inside the covered period. So for example, if you had a utility bill that you received in June and you paid it in July and the covered period included days in June, you can include those days, but even though that you pay it outside the covered period. So what they're allowing is flexibility to have more than 56 days, it appears, for the bills, but those are only for paid bills in the beginning of the covered period, really, that relate to prior days. There's nothing that's said in the application at this point that everything's limited to 56 days. I haven't seen that, and that's something we were surprised about, but that's how you can do it. You can't prepay like 12 months of expenses. That's not allowed.
Right. One of the questions that, and I'm going to jump around between all the different categories because that's the way questions are coming in, but also it's want to make sure we hit on the different areas. One of the questions that keeps coming up a lot, they're related, but they're not, and it relates to the other costs, the rent, utilities, the predominantly real estate taxes. The client has been asking numerous times about real estate tax. If they own their building, so they won't have rent, they don't have a mortgage, or they may have mortgage interest. Either way, are the real estate taxes allowed? And also, if we have triple net lease that includes real estate taxes, or the bill has real estate taxes broken out, is that also, can that be included?
The real estate taxes are not included.
Okay. That was too quick, Ken. You didn't give me a chance to look for another question.
Sorry. Sorry. You have a list of 100, so you can flip through them, and that's fine,
One of the things the attorney said yesterday, and I get a question a lot by the client, and this is the PPP application, not the audit process. It's been broadcast very loudly that if you're under 2 million, I don't want to say you have a safe harbor, but you're pretty much out of their view. If you're over the 2 million, there's a potential that you're going to be audited. Has there been any insight as to what this audit process is going to look like?
Well, they talk about it I think in the most recent interim final rules, and there's been a lot of writing about it, that they say that when you apply for forgiveness, the bank has 60 days to opine on that. And then they submit it to the SBA. It's then potentially still subject to review, and I believe there's a 90-day window at that point that's subject to review. That's for any application. The ones over 2 million, they're saying will be reviewed, even though they talk about audit. It's not clear as to who's going to do that and how they're going to do it, but the SBA is driving the process.
Right. Yeah. So it is very much an unknown. Jerry,
I just want to note that we are having, for anyone who has a loan over $2 million, we're having a session, I believe, next Tuesday morning to go through, what to prepare for.
great. Jerry brought up the comment about the health insurance for general partners. And Ken, I know that you've commented on this a lot in some meetings we were in. If you want to give some background on that.
Well, originally when a lot of people applied for the application and they applied for the funding, the healthcare and the pension was included for owners, partners, self-employed individuals. It appears now the language of the Q&A from the SBA excluded that. It includes it only for owners of S corporations. So S corporations are considered employees. They're not considered partner owners. So S corporations are fine, but partnerships, LLCs, sole proprietorships, the only thing that's included is basically take your pay at $100,000, divide by 52, multiplied by 8, which is around $15,000, and that's what you're allowed to be forgiven. That's what they have, and the application clarifies that as well.
Well, also C corporations, owners, shareholders of C corporations who are employees would get the health insurance as well.
Correct.
Right. And now sole proprietors. There's been a lot of questions about sole proprietors and their amount of compensation or income. And how is that determined?
You take 2019's income is what it's based off of, and it's 850 seconds of 2019. So what they're trying to prevent is someone who made, $20,000 last year, taking a loan and then turning around and giving themselves an increase. They want to limit it based upon last year's. If it's $100,000, it's capped on the 100. If it's less than that, it's capped on that.
Yeah, so basically you submit your Schedule C for forgiveness for 2019. It's going to have your net earnings from self-employment, and that's what you're allowed to use. If it's at 100,000, you're capped at the 852s of that, and that's your forgiveness portion on the actual pay that relates to just the pay itself. You can't include any health insurance or 401k, but you can include other costs, the non-payroll costs that are separate.
Great. The topic has come up numerous times about transportation. And even I think from our first presentation on this topic to last week, Mike gave me some clarification to I think even now. What is this transportation that can be included?
Well, it's funny because I had a client email me, I guess early this week or last week, saying he was on a webinar and they said, oh, you could deduct your, for transportation as a utility, you could take your car. And we don't believe that's the case. We believe, as Mike LaForge has said many times, that sometimes utility costs come with a separate transportation charge. So the fuel or the energy comes in one bill and there's a transportation bill that comes with it. It's typically on a corporation where they're purchasing large amounts. And so that transportation cost would be. We don't believe that cars are included there. Again, as Ken mentioned before, if you have a lease, it's possible, that is included in the rent number, but not for the transportation number.
Mm-hmm. And again, the leases have to be effective 2/15 or before then.
They had to be in effect at 2/15, right? And I guess that's to keep people from going out and entering into big leases during this time, which I don't know would do that, but I guess also for people that had the very loose leases with the related parties too. They wanted to make sure of that. One of the areas that significantly changed, and Ken, you did mention it, I want to make sure that people have heard what you said, is that this used to be just rent on just your rent on your real estate, and they significantly changed that now.
Yeah, so they included the word tangible property, which connotes that it's all leases that you have on actual property that you can, tangible meaning property you can touch, you know, that exists. So that's basically anything that you have. It could be leasing of equipment, it could be leasing of furniture, it could be anything, copy machines, which is equipment, you know, anything that you could think of that you have a lease in effect as of 2/15. So it seems to be all inclusive. But remember, the costs are limited, and you saw on the application to 70, it's only 25% of the total. 75% has to be payroll. And also, you could put in there, it's interesting, people were worried that you had to spend 75%, and there, you know, what if it was a strict rule? The application seems to show that you could put in anything you want for the 25%, and that will be, you know, accepted. And then you could put in your payroll, and there's not kind of, did you spend 75% of the funds at this point on payroll? So you put in your payroll amounts, and that's limited to basically 25% more of it's limited to those other costs. So you could try to load that up as much as you can, but you can't load it past that amount.
Right. The 25% is 25% of the payroll. So you put in your payroll times 25%. That's the maximum amount you can deduct as the other, right?
Well, mathematically, I don't think it's payroll times 25%. It's 25% of the total. So like if your payroll's 75, you know, you could have 25 of other costs, so that the total aggregate amount is 75% of payroll costs.
Okay. It's not 25% of the loan amount.
Not 25% of the loan amount, no.
It's the forgiveness amount.
Is that what you said?
Forgiveness amount.
Right. If somebody got $10 million, they don't automatically get to deduct 2.5 million as other costs. They first have to determine how much they paid for everything. So wanted to verify that. Yeah, because some people are also saying that they either heard on another webinar. It's, you know, I call these the golf course conversations. You know, when you're walking down the fairway mark and somebody says, "My buddy tells me this. My buddy tells me that." They heard in that fuel and mileage is transportation. I think that this is one area that's, I don't want to say gray, but it's very unclear on, and I don't know how aggressive you want to get with something. I don't know how much you're going to be able to come up with to, you know, of your mileage and transportation, fuel and mileage, unless that's the industry you're in. But I know somebody who asked a question. It's not. I see a lot of people asking questions about it, and I do have to put out another poll. You know, Ken and Mark are not nonprofit people, and they're trying to give as much direction as possible. Yeah, you know, I know that Bridget Hartnett, our partner, listens in on these. I see she's logged in, but I don't expect to be able to answer questions. But she will be looking over the questions with another team, and if they can give direction to the nonprofits specifically, they will. Because like somebody asked Mark, you answered the ownership question. They said, do nonprofits have owners? But you know, we'll be able to forward your nonprofit questions to somebody else if you don't feel they answered. As it relates to the next poll, go ahead, Mark.
The nonprofit technically doesn't have an owner. The people who work in the nonprofit don't own it. If they did, it wouldn't be a nonprofit, because to become a charitable organization, no benefits can inure to the owner. So it can't work that way.
Right. The poll is open right now. Looking down the questions, we'll take a breath on the rent and the utility, utilities, and we'll jump back to the taxes and the benefits. A lot of people have asked about workers' comp, Ken. Either they said if I pay it directly, somebody said it's taken out directly by the payroll service. Is workers' comp considered one of the insurance and benefits, taxes and benefits? Apologies.
No.
Okay. So 55%. For some reason, the poll's not showing good on mine. So it's very straightforward. I don't know if you guys see the results, but I've got 90% said all the above. And then the other categories are small. So hopefully people are able to answer now. Tom Sharkey, one of our previous presenters, said, is rent paid to an affiliated entity separate but commonly owed, can that be part of the forgiveness calculation? Related party rent.
Paid to a related party?
It can be if there was a lease in place, a written binding lease in place by February 15th. You know, there's been a bunch of articles I've been reading where certain commentators talk about the ability to increase rent. Chances are it may be meaningless, but I don't necessarily agree with that, because I think if you make changes to your lease now, I think it would be less than above board. But it doesn't mean you can't. As long as the lease existed, because what they were saying in a lot of these articles is, especially related party situations, they may charge below market rent, and now, you know, they can raise it to market and get forgiveness on that. Possible.
Right. So can you allocate rental payments if you're subleasing part of it? And that's interesting. I haven't had somebody ask this question, and I don't know if Francesca means this. So let's say that I rent out 100,000 square foot building, and I could use that rent. But what happens if I'm only using 80% of it and I sublease 20% to somebody else? Do I have to net them out?
Well, probably the answer is yes, is the right thing to do. Could the people who are under $2 million submit a rent check, you know, and potentially get it through? Yes. I'm not saying that that's something that should be done, though.
Okay, so it should probably be netted. All right, beat up on the rent and utilities, and I'll continue watching, but looking at some of the previous questions that we received as it relates to taxes and benefits. One of the areas I think that people are most confused on is, so it's payroll is limited to $100,000. You know, to somebody making $100,000. Okay, I guess did it by week or bi-weekly. That 100,000 does it not include the taxes and health insurance and benefits?
So the 100,000 is cash compensation only, and that's unless we're talking about self-employed or a partner. So let's exclude those because they don't get the other things. But for everybody else, it's cash compensation is the 100,000, and everything else is on top of that. You know, that was one of the things early on that was very unclear in the language of the statute in the original act, and some companies didn't include it. They capped everything at 100 in their applications, and some did not. They made it clear in one of the frequently asked question issues that came out sort of after all the applications were in, and they made it clear, and then they said, oh, well, sorry, you can't go back and amend for that. They recently came out with another set that said you could go back and amend, but most companies weren't going to, you know, go back and start the process and increase their loan. But it is included on the forgiveness.
I'll comment on that too. I know some companies tried to go back to their banks, and it was a hard process, and they weren't successfully able to do it either. So trying to get more funding on it, the banks don't even know how to handle it.
Yeah, I had a client that tried to almost claim that the bank was negligent, and I just said, you can try and say that they did it wrong, but the banks are scrambling at this point, and you know, they're doing the best that they can. And they really did try and help everybody out as best possible. So as it relates to 401k or profit sharing or defined benefit, a lot of people make their contributions as we recommend too. Maybe Mark doesn't recommend. I don't know. I'm not a tax guy. But when do they have to make their employer, you know, discretionary or defined benefit plan contributions? Generally, it's by the time the tax return is filed, including extension dates, right?
Correct.
Now, if they do that, they won't be able to include that as a benefit. What would you recommend them do? Can they advance pay it? I'll say it that way, in these 8 weeks.
So on the match side, when you have the match, it's not a problem because it's every week. If So that shouldn't be an issue. But on the actual, if you have a formula in your profit sharing plan that does it once a year, the recommendation would be to make it during the covered period. You could make, now you don't even have to, I mean, you could potentially, but you have to make it by the time, you know, you file your tax return. You could split the contribution if you want. You don't have to make it in one big swipe. You could do basically the percentage that would be forgivable and pay it during that period, and then pay the rest on the back end. That's kind of, you know, if you don't have the cash flow, that would be the recommendation. If you have the cash flow to just make it this year, just make it now, you know, during the covered period, and go from there. And you're going to get allocated. You don't get the full amount. It's going to be allocated based on the covered period days.
Yeah, what I've been telling clients, Brad, on that is, you know, because it's formulaic. Certainly, if it's a defined benefit, even if it's, you know, like a new comparability profit sharing plan or something like that, I've been telling them to estimate, go a little lower than you think it might be, because you don't want to put too much in, and just put that amount in so that it's in there and you can count it, because you probably counted it in your loan application formula for last year.
Yeah. So one of the other things somebody mentioned I thought was interesting, I hadn't even thought about this. You can have private disability. You know, everybody thinks as state and local income taxes, SUI, SDI, especially in New Jersey. You can leave the state program and have your own private disability plan. Is that included then?
I don't think so.
No, because it says state under the lines. They're very clear on that on the application and also on all the guidance. It appears that that's the only thing that they're allowing.
This, so you have to be paying it to the state. And in essence, what they're doing is they're trying to get the money back into the state coffers. No political message here at all. So don't misread that. Somebody said you keep mentioning $100,000 salary for sole proprietorship. Is this a cap by the SBA or a talking number for this webinar?
No, it's a cap.
Yeah.
It's a cap.
It's a cap. It's the lesser of the $100,000 on your, if you make over 100 on your Schedule C, then it's capped at 100. If you make less than 100, then it's capped at whatever your net earnings from self-employment is for 2019, divided by 52 weeks times by 8 weeks.
Right. I'm going to jump over to payroll and then FTE in a little bit. I am watching the time, and we will go over a little bit too, because I want to try and get to some of these. I am trying to group them together. Somebody asked a question we haven't really ever hit on this area: union benefits. Now, you know, the retirement plans, health insurance, that's included in there. Well, some people have to pay it to the union. Is that included also?
I would say yes, if it's separately stated. I mean, I'm be honest, I haven't looked at what comes in from a union bill, but if when they're paying their union payments, if they're separately stating the amount for pension, for health insurance, yes. I saw a question, and I've had other questions come in the last couple of weeks where they talked about the local union, this and that. No, I mean, it's strictly health benefits and retirement benefits. So if it's bundled, I think that could be problematic. If it's separately stated, I would think those pieces would work.
The unions generally separately state that, so it should work. I have many clients with unions, and they have to pay it separately. They have their pension amount that they receive a bill for, their insurance amount is all separately stated.
Great. So I'm going to jump over to, I'll give out one more poll real quick, but we've been sitting here, Sobelco has pretty much closed the office down for the past 10 weeks. I've been working down my basement and hearing three initials that I hope to never hear after this goes away, and that's FTE. It just gives me the shakes at this point. You know, and go to the doctor and get a shot for it. I don't know if anybody, I know you guys do, but anybody of the clients or the attendees have a good handle on it. We originally came out 30, 30, 30, 30, 30. That's what we kept telling clients. And all of a sudden the forgiveness application comes out and it's 40. You know, it's
So-
like, yeah, price is right.
Yeah, so again, we touched on this before when I was talking about, kind of ran through the points to try to get through to have a full understanding of the overview of the application. But you basically take your employees, basically, and it's 40 equals 1. If you're over 40 hours, then that doesn't count as one full-time equivalent. Anyone under 40, you could use two methods. You could use actual hours, add up all your hours for people under 40 for a particular week, and divide by 40 to get to a full-time equivalent amount, and add that to the people who are over 40, which are full-time, and you get a full total number. Or you could use half, basically as a measure in it. So if someone has 2 hours, or if they have 38, they're just measured as 0.5, and you can use that methodology. So those two methodologies are used. And then what you have to do for the periods is you have to average every single week. Take all the weeks that are in the periods that they have that they want you to look at, whether it's April 1st to June 30th, 19, or whether it's January 1st, 2020 to February 29th, or whether it's actually on the February 15th date, and there's other dates as well. If it's actually during a range of periods for the weeks, you have to take every week. You have to find out what your full-time equivalent is for that week. Then you got to take week. For example, 4/1 to 6/30/19. So you have maybe around 12 weeks in that area. So you have 12 numbers that you add up after you add up everything, and you divide by 12 to get to your average full-time equivalent for that period. And that's how it's calculated. That's why, again, I go back to, there's about 5 or 6 different periods here. If you're going to be doing this internally, it's going to take all day, it might take weeks to do, figure out all this stuff. Hopefully the payroll companies soon will have an easy to measure report that gets you full-time equivalents for those weeks or for those periods, so you could see those and have it done and run, and then give that backup detail in, because you need to give that backup in the application for forgiveness. There's a whole listing of documents that have to be provided, and that's part of it. So we're banking on the payroll companies to do it. I've had conversations with ADP, Paychecks, and all different other large payroll organizations. Now, I know not everybody on the phone uses large ones, but they've committed that they said they're going to create reports for this stuff, but I just haven't seen anything yet. And hopefully, the reports are created and they're reliable. That's what we hope. And if that's the case, it will make it a little bit easier to do these calculations.
Yeah, and you're saying payroll companies, a lot of people are on PEOs. And well, I'm not, we have 247 people on right now. I'm not recommending all 247 call your payroll companies, because they'll kill me if I recommend that, if you go and call right now. But at some point, I recommend that you reach out to your payroll company or POE and find out what they're going to provide you. And if they're not going to provide you with the FTE, and amongst a lot of other information, you need to start working this now. As Ken said, this could take you a day, a week, weeks to try and get this. Start working through this process now, and at a minimum, start gathering the information, because I see a lot of people asking questions, and it's like they want to ask questions before they start gathering information. The information you start gathering are your employees and their hours. At least start with that.
The one thing I want to bring up that's really important here on this gathering is, if you know that you cut your employees down and you had a reduction in workforce, you need to figure out on the pay period that has the date February 15th, what your FTE number is. Is that number per the application is going to allow you to restore your people on June 30th. Okay, if you have an FTE count, for example, of 120 at that point in time, you need to hit 120 or more to be able to restore everything. If you don't do that, you're not going to be able to have a reduction of the reduction of your forgiveness or / restoration. So I think if anything's going to be taken out of here based on the application and you're thinking about hiring back your employees, which may not be possible by June 30th based on New Jersey, and hopefully there's a change or a patch in Congress to help us here. But as of right now, February 15th is the measuring period if you know you had a reduction in workforce.
Brad, the other important thing on FTEs that we get a ton of questions on is what happens if I laid somebody off for other reasons, like cause, or if somebody quit or retired. And it's important to note that those people are not included in the calculation. Now, you should document it, why somebody was laid off, for cause. It should be in a personnel file and so on, but that was something that was unclear, and it became clear in the application and in the interim final rules that if you got rid of somebody for cause, if they retired or they left on their own, or if they reduced their hours on their own, then they're not included in the calculation.
Right, and I've also heard, and somebody actually brought it up here too, the reasonable efforts to rehire. And I think that's, I don't want to say a slippery slope, but it's a dangerous area because you'll have some people say, well, I tried to rehire the people I laid off, but they didn't want to come back because they wanted to stay on unemployment. Well, then you have to be reporting to unemployment, the division, that their job was available for them and they may have to pay back their unemployment too.
They made that very clear in this in the final rules here, that it has to be in writing, the offer. It has to be for same hours, same pay. And if the person turns down the position, then within, I believe they said 30 days, you have to report to unemployment that that person was offered the position and turned it down.
Right.
They also said, we don't know how you're going to do that, but you have 30 days to do that because there's, good luck getting in touch with unemployment.
No problems in New Jersey. Mark, you said a couple words, and I wanted to reemphasize that. Terminated with cause. That's not quitting. You terminated with cause.
Correct. You let somebody go because they weren't performing.
Correct. Not quitting, because somebody asked about quitting. You did not say quitting that I recall.
But also if somebody left the company on their own, they're not counted. You shouldn't be penalized. Understand the basis of this law is to try and keep people employed. That if you're laying them off because of the pandemic, it's not if in the normal course of business somebody takes another job. Well, you didn't lay them off; they left. If somebody didn't do their job well and you fired them for cause, that doesn't count. So they're not penalizing you. They're not looking at it on a base FTE. They're saying take out the ones that don't count and then look at it. They're only really focused on the pandemic.
And again, this is based on restoration. So these are the people that could be taken out of the equation, that you could add them basically as being restored per mark. But if you don't hit the full value, if you're even a tenth of an FTE off, there's no restoration of what's lost.
If somebody's out on family medical leave act, are they excluded also?
If they're out, I believe that you could exclude them.
I would believe so.
Okay. I'm going to put up the next poll because I saw it's after 9:30. I want to make sure people that need to get off can answer the 3 polls. It's regarding PPP, but I'll ask the question as I'm putting the poll up. Remember to minimize your screen in case you're having problems. You keep mentioning 40 hours. They don't say it this way. I said it. You keep mentioning 40 hours. What happens if we only work 37.5-hour week?
It should be the same because it's apples to apples. So you're comparing the periods that, Ken described. So if they work 37.5 hours, there's X number of FTEs based on that in the look back period. Then there's going to be, let's assume they didn't change one person, not one person got laid off, then the number of FTEs are going to be the same in both periods. So it really doesn't matter. I mean, the fact that they used 40 versus 30 or 35 or whatever really doesn't matter because you're mixing apples to apples.
So the point is that if you use 37, that's pretty much your bright line of what you're starting at. And then anything under that.
Right. So if you're saying 40 and you had 3 people at 37.5 hours in, the your base period, and now you have 3 people at 37.5 hours. Well, both cases you're going to have based on 42.8 or whatever FTEs in both times. It's going to be the same, and you get a free, a pass.
Christina asked a question. It's very interesting because I have a client that's in the same situation. I don't know if you guys are going to know the answer. I recommended that we talk to an attorney about this with the client. What happens if you have a reduction in workforce or reduction in the number of FTEs based on how did she worded it great, restrictions in capacity under reopening guidelines. So I have a client that they're an essential business, but they've been told you can't have everybody there because of space constraints.
Yeah, so as of right now, without a patch to help, and this has been, I mean, the restaurant industry, for example, is getting crushed because they can't get their people back to work. And even talking about, for example, having sort of spacing and distancing, and they only half the people allowed in the restaurant, they may not even be able to pay their overhead. So the restaurants work on very thin margins.
Sure.
So the reality is, hopefully, there's some patches to help with this. There's been discussions in Congress on patches to not have the expenses be non-deductible, to extend the 8-week period to a 24-week period, to basically help certain industries that are really having, or certain areas that are really struggling. The question really becomes is, can the government, both the Democrats and Republicans and the president, get together for the common good and make this work?
You're funny. You're funny. I didn't know you were going to end on a joke. So,
It's not a joke, it's a fantasy.
Well, there we go. What was he smoking? A couple more quick questions and we will wrap it up. We're almost 10 minutes over, but somebody said, Debbie said, and I'm not too sure I have the question right. I don't know if you're going to answer. How about non-work time? Is that excluded? So sick time, vacation time, etc.
No, it's included.
It is, okay. Sole proprietor that has a loss of income in 2020, but also showed business loss for 2019. Can they apply? They can't apply because your application is based on your income for 2019.
Correct.
Yeah. So, I tried to hit on a lot of the questions. I think that somebody had asked about 1099 people. This is about employees, not about 1099s. People that you pay where you issue a 1099. There are a lot of other areas. For those that I am going to ask the two of you to give the last comments. But we had a lot of questions submitted last night or up to last night. We had a lot of questions come in today. I'm going to show the questions to the presenters too afterwards. We'll probably pull together a list and submit it to everybody with people's names excluded. But in closing, Mark, what kind of words of wisdom can you give to people?
Well, I guess, this is what we know now. We'll see what comes out. Let's see, it's Thursday, so they like to come out with these things on Friday night. So we'll see what comes out Friday night. And they could change everything that we already know. If Congress passes something, that'll change everything we know. Like Ken talked about a 24-week. I've read a couple other things that they're bantering around down there. So right now, this is what we know. There's still some unanswered questions, but it's getting fewer and fewer. That's a good thing. But again, it may change tomorrow night. We'll see what we get.
Yeah, the presenters that I saw yesterday, one worked for the administration at one point, and he said for some reason they always had the attitude to send stuff out on Friday nights. So to avoid questions, I guess.
Yeah, especially on a holiday weekend, it's perfect.
Yeah, and that's what we want to do is read over the holiday weekend. Ken, do you have any more funny jokes to tell us like that last one?
Overall, I agree with what Mark said and what you said, Brad, as far as things being changed potentially. I would say that if you feel this is extremely complicated, you're not alone. This is, they've made this into, you know, the ability to be able to figure this out, especially for small businesses, is extremely, extremely low. It's just too complicated. Now, having said that, you know, you're gonna need a lot of assistance probably from your payroll company. We're here to help you with questions. We're doing the best we can as well to figure this out and kind of walk through it. Hopefully there'll be some schedules that flow all together in the future that may help kind of bring everything from the worksheets up into the application. And, you know, this is not something that is going to be forgiven right away too. I think the people who have under 2 million, the companies, it'll be a little quicker because the banks are hiring independent people to review all the documentation, the applications. The ones over 2 million are going to take a very long time to do. The good news is if you're deferring your employer taxes related to the FICA taxes, you could continue doing it till it's forgiven. So that's a helpful, it's like a 0% loan on that. So you could continue doing that. But on the flip side, it's just going to be, I see this to be a very big challenge to get everybody through this, to get this forgiven. Nothing in life is free, but hopefully we'll have some ability to work through and help everybody here get the amount that they received mostly forgiven.
Great way to wrap it up, Ken. I couldn't say any better. I'm going to close it on that, other than just to say I want to thank the two presenters, Ken and Mark, and I want to thank everybody that's attended. I hope you got something out of this. We will try and get you information as to the questions. Other than that, Mark, Ken, and the attendees, have a good day.
So